on, the Nairobi Securities week-on-week equity turnover stood at 1.5 billion Kenyan shillings on 49 million shares against 1.57 million shares on 45 million shares traded the previous week. Now, for more on this, we're joined by Erick Mokaya, the founder of Mwango Capital. Happy New Year, Erick. Always a pleasure speaking to you. That's trading on the Nairobi Securities Exchange as of last week. There was a movement in those shares, but we saw a decline overall there on the all-share index. What is the biggest determinant of trade there at the beginning of the year?
I think it's been a soft year. I think it's January. I would call it more the fact that people don't have a lot of money in the pocket. So they call it in Kenya, they call it in January. So it's a little bit of a dry period. So I would say that's affecting investors' pockets. So that translates also to a little bit of downtime in the market. So it's also surprising. But of course, the top story this year has been car in general, which has shot up, I think, 51% so far this year. And it's been keeping going up. So last week it was only up 18%. So that's a little bit lower than normal. But I think generally, I think the NSE is doing well, not so much. 0.4% down week on week is not that big of a deal on the NSE 20. So I think not such a big deal. So the other big performer last week was Express. That was also up, I think, around 13%. NBV 10% up. Kakuzi 8% up, despite the issues that they've had and the fact that they've issued a profit warning. Olympia Capital was also 5% up. So the big losers last week were companies like TransCentury, 10% down, Flame Tree, Home Africa, Kenya Power, 4.57% down. Mostly, we would say, because of the fact that they've had, in the recent past, I think they've been 2 or 3 times when the whole country has been plunging to power shortages. So I think that has also affected the company so far. And the fact that also they have to take up a 15% cut in revenues. I think they may take a hit in terms of 15% if they are going to reduce some of the if they have to reduce the cost as the president has promised the consumers at the end of this year. So I think generally I would say that it wasn't a bad week, just not an up week. So I think that's what I would say.
Erick, I want to go back to the beginning where that stock that you've mentioned, Car in General, already feeling like the NBV of last year in terms of its price movement. Car in General up 51%, you say, since the beginning of the year, 18% just last week alone. What's the main driver of traction towards this counter?
So surprisingly, during this COVID period, Kenyans have spent a lot of money on cars. So surprisingly, I think mostly it's generally around the globe that people are spending more money on cars. They would rather not use public transport. So I think it's not unusual that they are choosing to actually do private transport. And of course, some of the beneficiaries of that has been Car in General. So if you notice markets in the US, especially, used car prices way higher. You actually buy a used car at a higher price than a new car because of the shortages globally that are going on. But Car in General is having such a brilliant period. They posted the results for the year to September last year. So I think the 2021 financial year, the performance was really good. They paid an extra dividends, I think, for 4x the normal dividends that they usually pay. They issued bonus shares. So I think it's been a period of them rewarding their shareholders who have been patiently with them for a long time. So I think that's why it's being pushed up. But also something to note, it's being pushed up on very low volumes. So the volumes are a significant percentage of around 80 to 88% of the shares are actually held by institutional investors who are not selling or actually are buying more in the market. So I think the volumes are moving up on very thin volumes. So I think today it was actually one of the biggest losers. So actually it was one of the top 5 biggest losers. So I think it's down 3%. So that to be expected. The euphoria will die down, of course. And especially as there is a small case with the KRA that they need to be solving soon. So I think that's what I would say. So it's more out, from my perspective, it's actually more grounded than the NBV rally last year. But it's, again, sometimes small rallies can be pushed to their limits, and then you don't have much to go on, and then the share price has to go down. And I think that's what's happening. So soon there will be a bit of a realignment of the share price, so to speak, to be in line with fundamentals. But right now, I think it's a bit too stretched.
And Erick, you just got that out of my mouth. I wanted to ask you in regards to if it can maintain this movement in the green, but already it's down. What other counters should our viewers or potential investors look out for on the NSE, especially this week?
I think there's been a hint from the latest central bank report that banks had a really spectacular last year. So I think the banks that are solidly grounded, they are going to have a spectacular quarter Q4 and full year reports, especially at the report in March. So looking forward to that. Those are some of the companies that you're really paying forward to. And of course, sentiment realigning in terms of getting strategic investors on board. I think that's, and also like shedding a little bit of the debt and wanting to list Centum Re would also maybe unlock a little bit of value for that. So that's another counter that you're watching. Of course, cross board, we're also watching Kakuzi a little bit with the profit warning, but they're having issues in that regard. But I guess it's short-term temporal kind of cyclical issues that they will overcome in the end. So I think those are some of like the counters that you're watching this month. It's a low period, so nothing much to write across board. I think if looking at the reports I saw today, Longhorn was one of the biggest movers, up 10%, maybe because school is opening, and this month is when books are being bought a lot more. So I think directionally for the year, Longhorn are really well positioned, especially because I don't know if you're aware, in Kenya there is going to be multiple exams across board because to try and catch up with the COVID years that they lost. So I think those are some of the counters that are well positioned, but really looking forward to see how the banks do. This week also we are looking at the MPC meeting, the Monetary Policy Committee's meeting this week in Kenya. So trying to see what's happening across board, and of course across Uganda this week they lost their board of governor, the governor of the central bank there. So it's a sad time there. So I think something to watch how that unfolds and who's going to take over, because he's one of the longest serving governors in the central bank. So yes, condolences to the people of Uganda.
Yeah, condolences to the people of Uganda. Emmanuel Mutebile, he has been credited for a lot, especially when it comes to monetary and fiscal policy across the region, not just in Uganda itself. Erick, you're mentioning the banks. The MPC is around the corner, and hopefully we'll get you later in the week to talk about that MPC. But one counter I want us to talk about is that Equity Group counter with the announcement regarding the insurance subsidiary that's coming up. And the DRC move, of course. We expected more movement on that equity stock. Why hasn't it moved in that green direction?
I think I've been yet to understand fully what the move that equity did last week. But I think from my understanding of the people I talked to in the tech sector, they feel like it's a significant move. So they made a move in terms of they're going to allow if you have a pay with equity pay bill number as a merchant, you're able to receive money from across the other platforms. So from M-Pesa, from T-Cash, or any other platform out there. So that is significant because you're not going to be charged for some of the money, and the money is going to be credited to your account almost immediately and all. So I think it's a significant move, showing like they're really intent on making sure that they entrench themselves within the tech sector as one of the banks that you should watch out for. So I think another move they made this month was about them launching an insurance arm. So I think they have an insurance business. So I think it's, I can't remember if it's life or general insurance. So I think that's a significant move that they're trying to become maybe a one-stop shop for all your financial products. So not sure how that works out, because globally also we've seen conglomerates are not the way to go, but I think they're making significant moves. Well, so perhaps the market is not reading the tea leaves and trying to see exactly what, or at least not reading the mood in the market in terms of the way Equity Bank is doing. But a report from Renaissance Capital today shows that they have a significant, they really think Equity Bank is strategically positioned to perform very well going to this next year. So waiting for the full year numbers. I really want to see KCB versus Equity, how they're doing in terms of assets and how they performed last year. So very interesting to see how these two kind of giants go head to head going into the new year. So I hope the share price will catch up to the news that what Equity Bank has realized this month. So I think with time, that's when the market's going to understand fully what Equity Bank has done this month.